Ladies and gentlemen, K-Kim here. Welcome to the market update, the weekend edition. Hope you guys are enjoying your day, enjoying your week. We've been seeing a little bit of volatility last couple days. So we're going to talk about that. Tonight, I thought we will do market indices total recap. So I'll cover all the indices here as you see on your left. We'll look at Spider, Qs, Diamond, Russell, Transport, the banks. I've also added a VIX. I know a lot of people like to analyze the VIX, and so I'll look at the VIX tonight. Maybe we'll look at VIX on a weekly basis on the weekend videos. As usual, we'll look at gold, and Bitcoin will end the day today. We'll skip the equities today. I wanted to focus on the indices, give you guys kind of a total complete recap for the indices going forward into next week. So I think I think the biggest problem right now that most people are contemplating is, well, with the NASDAQ being where it's at, the Qs here, how can these indices can go any higher, right? And I think that's the biggest problem right now. I think that's the biggest question right now is that the NASDAQ is way too extended. That thing is going to crash the whole market down, or at least very steep decline. There's a lot of fear, there's a lot of uncertainty, and makes people very uneasy going long in these levels because where the NASDAQ is, because NASDAQ's been pretty much trumping higher every single day. Generally speaking, literally not every single day, but generally speaking, market, NASDAQ's been going up pretty much every day last several months, right? NASDAQ is year to date, look, you can see right here, 21% year to date, while all the indices are struggling. They're all negatives. You can see banks still down 20% year to date. You can see that Russell 2000 is down 10%, and S&P just turned positive for the year. Well, the NASDAQ is 21%. Keep in mind, we've never seen this kind of discrepancies before in the history of stock market, right? Some people say, well, we've seen something like that, Kay, back in dot-com bubble in 1999, and well, back in 1999, 1997, what happened was everything was going up. NASDAQ was just kind of on a different level, right? Tech stocks were like on a steroids, while the other indices there, everything was going up at the time. It's just NASDAQ was just going crazy to the upside. It's different story now. We don't see everything else going up. We only see NASDAQ going up, and we see other sectors, other indices struggling. And so because of that, it's been very difficult market for many. And I'm going to try to answer those hard questions in this video, how to navigate this market, and it is all coming up right now. So let's start with Spider here, but let's first follow up on the 65-minute chart, which we've been looking at on a daily chart, or 65-minute chart on a daily basis this past week. So let's do this first, and then we'll go back and we'll talk about the issue that we're having right now with the NASDAQ being extended and everything else is lagging, right? So first of all, looking at the 65-minute chart on the S&P, we are down about 0.6%, pretty much sideways day all day long. We did see a gap down. This is where it closed. This is where it opened, sideways all day. You can see that my midterm moving average, we're getting near to that level. That was a prior resistance and then became support. Actually, this was support. It's actually that, that midterm moving average does have pretty impressive resume, because you can see that it was resistance here. We saw that big gap up, got to that, my midterm moving average there, it pulled back, and then we actually broke above it, came down, retested it. We found support in that vicinity, got back up, pulled back, got up again, but act as resistance would pull back here, and then we saw a little bit of support there. And then it's been acting as support ever since, as you can see here and in here and here. And we have to keep in mind that my midterm moving average is rising. So when you see that blue dotted moving average is rising, you want to give benefit of the doubt to the buyers. And looking at things since the March lows here, you can see there brief time where it moved sideways, right? I'm putting square in a sideways move, right? There were 3 incidents where we moved sideways, sideways, sideways. But when the moving average is rising, you do want to give benefit of the doubt to the buyers, right? So we're just right at this level. And keep in mind, you know, sometimes what can happen is, here you can say back in May 12th, right here, right? That was definitely rising, and then price got below it briefly, right there, and then it just broke back above it, right? So there's a little bit of whipsawing action, and you see how that moving average continued to rise. So when you are dealing with midterm uptrend, right, based on my midterm moving average, there could be a lot of head fakes like this, right? You can see that this thing broke below it briefly, but got right back up, and then we continued on to the upside, and that my midterm moving average continued to rise higher, right? So look at where it rose here, right? This was back in 252, and it kept rising until where? 322, and that was a big move, right? And then my midterm moving has started moving sideways, and now we're rising back up. That doesn't mean that we're gonna find support right at this level. It means we may see some shenanigan. We may see the price briefly getting below it. That's why I have this level here, 312, 318. But overall sense, overall posture, if you're a longer term trader, if you're a long-term investor, you know, here, not a huge deal. Right now, I think only people are kind of very nervous if you're an extremely short-term trader. If you're a day trader, short-term swing trader, well, if you went long, you really want this to pop. Unless you're a short-term trader, this is not a huge deal, right? Overall posture is still bullish, right? Nobody knows if this level is going to act as support. Nobody does. But what I have to say is I want to give benefit of the doubt to the buyers in the midterm. But in the short term of things, because we got that little gap open, and then my short-term moving average is declining, so I want to give benefit of the doubt to the sellers in the short term. So short-term bearish, midterm bullish, neutral to bullish. Let's do neutral to bullish in the midterm, obviously long-term bullish, right? So again, short-term bearish, midterm neutral to bullish, and long-term bullish. Let's check out that oscillator here. So oscillator hasn't crossed up yet. We are in that vicinity here. So bears are getting tired. That doesn't mean they cannot push any lower. They could push even lower if they really want to. Only question is, are the bears going to utilize that little bit of energy they might have left, or are the buyers come back up? So here's what I propose going into next week, at least on Monday, early trading hours on Monday. What buyers want to see, because of this little tiny gap right over there, that gap is going to make things hectic. And also, we got the short-term moving average just right in the vicinity of 321. So what the buyers need to do, gap it up. We need to gap above 323.34. It's not a big gap up. It's just, that's only 0.7% gap up. That's all it needs for the buyers to jump above this gap, jump above this small short-term moving average, and keep this oscillator crossing back up. That's the best bet for the buyers. Buyers need to gap up on Monday. Otherwise, they're trying to get up here and fill this gap. That's going to act as resistance, may come back, potentially a double bottom or lower high before creating lower low. That we have to come back on Monday early morning to figure that out. And obviously, I'll tweet things out on Monday morning or afternoon to let you guys know. So we are at that vicinity of potentially bears are getting tired. But if they really want to, they can squeeze a little bit more to the downside. So if bears decided they're going to squeeze a little bit more, if we see a gap down or continue to the downside, I can see that this thing coming potentially down to, 313 and 312. And 312, we do see my longer term moving average hovering in that vicinity last time. We saw that that's the level we find support. And you might ask, well, okay, if we actually do come down here to 312, are the bears turning this into a downtrend? Not necessarily, because we still do have cultivation of higher lows, right? If bears really want to turn this into a downtrend, they must break below 312, 310 like this. And then that prior support needs to act as resistance here and then continue lower. So we're at 320 now, right? So we that's just conjecturing. I can't say that's what's going to happen, right? We will come back. Obviously, we'll look at this every single day next week, like we've been doing last several months. We've been looking at every single day, and I'll let you guys know when the trend shifts. But for now, trend is up. We want to give benefit of the doubt to the buyers in the overall sense because we still cultivating higher lows here, right? Even if bears bring it down to 312 with my long-term moving average in that vicinity residing, we still have to give benefit of the doubt to the buyers in the longer term. Remember what I said back in late June here, right? Remember what I said in June, late June, it's not enough. It's not enough for the bears to cultivate an established downtrend just getting down here. What they need to do is break below it and then get up, use these support as prior new resistance, and then pull back. If I see this happening, then at the time I say, you know what, we're in a overall bearish downtrend establishment happening. But I said, well, for now, we don't have that. That's what I was saying in late June, June 29, June 26, June 27. You can go back, check my video, what I was saying, right? But as of now, as of this day, when you do your analysis, you do your analysis based on what you see, right? And keep in mind, at the time, we still did have a long-term, bullish trend. We did have higher lows, right? And something that we talked about back in late June. And then what happened after that? Well, we saw that move. And that's been the trend last several months. So until we see evidence that this trend has reversed, right? You guys love to recite Dow theory, right? Trend is assumed to be in effect / valid until it gives us a clear signal that it has been reversed. Do we have any kind of clear signal that this market's trend has been reversed? Looking at S&P, NASDAQ, do we have any kind of clear signal as of today, as of this moment, that this trend has been reversed? This is a reason why. When you just want to call things, that's how you lose money in the market. When you just want to call things without any kind of evidence, right? Sometimes you get lucky here and there, right? But we want to give benefit of the doubt in the overall trend because market tends to follow that trend, right? And some of you might say, well, what about March, Cat? That thing just came down hard. Well, when was the last time you saw anything like that? When was the last time market just went up, came straight down? That's a very rare occurrence. Last time I think we saw anything similar was 1987, which was about, 33 years ago, right? Even 2008, we didn't see something like that. Market doesn't just go up and come straight down. What I'm saying is, those kind of event is very rare. That's kind of like, let's say you somehow caught that, right? That's like winning a jackpot. But none of us here are gonna be thinking about winning a jackpot, do we? And if people have been calling top, they've been calling top for years. We're talking 2012, 2013, 2014, 2015, 2016, 2017, 18, 19. And then let's say if they somehow caught a lot of this move. Let's just say they caught it. Somehow they caught this move. And it was very difficult. Even the shorts, man. It was extremely difficult to hold overnight. You know why? Look at these moves. Even after a gap down move, it always ended the day with like big bullish candle. So it was very difficult for many shorts to hold their put options or shorts overnight if they're short term, because the way they ended the day each day. So this move was very difficult for many, even the shorts. So, and this is something that we've never seen happen in the stock markets. First time we've seen it. So relying on something that is very rare is kind of like you asking for, you waiting to win a lottery. Something extremely rare, but you're somehow going for it every single day. That doesn't make sense, right? That's kind of what I mean. So we wanna stick with the overall trend. So obviously I'll come back for you guys Monday and tweet things out during the day. You can follow me at 2K Kim, and we'll go from there. So let's go back to the daily chart here. So looking at the daily chart on the S&P here, you can see that we do have this subtle higher high. And that's a good thing. Every time when the market, even if it's a subtle, if the market cultivates higher high, that's always a good thing. You could say, this is a subtle higher high, okay? That was a good thing, wasn't it? And that's a subtle higher high. Well, that was a good thing too, right? It didn't pan out right away. We did see these pullbacks, but eventually, after these subtle higher highs, what did we see? Well, that's what we saw with that subtle higher highs. That subtle higher high, that's constructive. Looking at things in a longer term picture, mid-term picture. So looking at Spider here, we are holding my, that's a 20 EMA, I believe, in my daily chart. So that's where we found support back in mid-July. That's where we're hanging around 319 area. And we got a little bit of doji there. So we have to see how things gonna pan out early days of trading next week. But even looking at the daily chart, overall stance should be bullish. We're still in an uptrend here, as you can see, higher lows and higher highs. If this market decided it's going to see much more selling next week, we will know about it. But even then, you saw what it was like back in late June here. You know what it felt like in mid-June here when this gap down. We saw 6-7% down there in one day. This was what this was. Right here, a gap down and flush, like 6% down day in one day. And everybody was freaking out. Why? Because, well, we just witnessed what happened in March. And maybe this is another second wave plunge, right? That's what people were talking about back in mid-June and throughout the entire June, right? And it happened. Maybe it's a coincidence, I don't know. It happened on the day after when they announced that they're gonna slowly open up the economy. That was this day, I believe, and the next day market tanked, right? Even with that 6% decline, even when everybody was looking for, some crazy down moves like in March, we had to look at things objectively at the time. Again, you can go back and check my video back in June. And, well, we held these levels right here, and that was kind of precisely prior resistance, new support, which is rising pivot. Let's go to Qs here. So Qs, again, the question that everybody asking, Qs is up 20% year to date. It's up from the March lows at 1.60 some percent, currently about 52%. There's no way, right? That's what people are saying. Okay, there's no way this thing going any higher. There has to be a steep decline. First of all, nothing has to be anything. Nothing is due for anything. Laws of physics do not apply in the stock market. That does not mean it's going to just go up and up and up and up and up without a steep decline. I don't know. I've said this many times on every weekend video that the hardest endeavor is calling the top. And I've instructed and taught you guys in the last several weekend videos that when you're dealing with market is this extended, instead of shorting, right? This is not a level to chase. I have not put on any kind of new long positions up here. But what I did though this week, what I did was I was closing out a lot of my large tech stocks that I've been accumulating since March lows in April. I've been closing a lot of that. I closed out my Square, longs. I closed out my Apple longs. I closed out what was another one? Netflix longs, right? So, but I'm still holding some of the other stocks that's been kind of lagging, right? So this is a level that you do not want to chase, but you definitely don't want to short either. This is a level where if you've been long before, it's a level to start unloading. Again, unless you're a short-term trader, unless you're a day trader, you can try to profit from up and down fluctuations in the short term. So how do you navigate this market is, again, if you're a day trader, guys, it doesn't apply to you guys, because you guys if you're a day trader, it doesn't matter, because every single day you're going to be in and out, in and out, in and out anyway. But if you're somewhat longer term, if you're somewhat position trader, you like to position yourself, you like to write things, if you're a long-term investor, how do you navigate this market, right? Well, the Nasdaq is extended. So what you do is you reduce exposure on the Nasdaq because it's extended. But doesn't mean you're going to start accumulating a lot of stocks either on some of the sectors and indices that are lagging, because we don't know when we're going to see the Nasdaq potentially see a steep decline. Because if the Nasdaq decided it's going to have a steep decline, well, it's going to drag everything down with it. But remember, you guys hear me say it a lot, price can correct through time or correct through price. So what we don't know is Nasdaq potentially correcting through time. I mean, it will have it, even if it's correct through time, it will have its pullbacks. But we could see some kind of sideways move. We saw something like that back in 2016. Do you know that? The reason I remember that is because I was trading back in 2016, and everyone, this is right here. So you guys remember in 2015, the commotion that we had in 2015 and 16? So we're talking much of a bearishness in 2015 and 16. I was long. I have a video still on YouTube back in 2016, 5 reasons why stock market crashed not. That probably is the only bullish video that you're going to find on YouTube regarding 2016 market. We're talking everyone was bearish. Everybody was calling global market meltdown. Seriously, I'm not even kidding. And everybody was calling for that in the head and shoulder formation, the topping pattern, right? And then all of a sudden, Nasdaq just made a big run like that, like from here, like, it wasn't as smooth as today, but got up, pulled back, and then look at that move, boom, and then all of a sudden it led the whole market. It's not quite dramatic as today, obviously. Today's way more dramatic, way more dramatic, as you can see. But Nasdaq also did lead back in late 2016 here. And then it kind of corrected through what? Through time. It really didn't see a steep correction, but it moved sideways. We did have a correction here, 3 to 5% or something like that, but essentially it just moved sideways, right? And I remember during those times, some of the lagging indices, lagging sectors were catching up, right? And then, do you know what Nasdaq did? This is what Nasdaq did. Look at that. This is what it did. I'm not saying this is what's going to happen. Look at this. Look at Nasdaq. What I'm saying is, back in late 2016, this vicinity, so many people, I mean everyone, because I was in social media, I was producing videos, even on the comments and replies, so much fear. People even call that head and shoulder formation, triple top, right? There's no way you already went from here to here. What was the percentage from there? So that was, yeah, that wasn't as dramatic as today, but that wasn't as dramatic pullback as today either. That was like 17, 20%, but people are freaking out. Just freaking out. People are just freaking out, right? Like everybody was like whole TV was freaking out. Everyone was freaking out. And then also, you know, this was when like Trump took the office. So I mean, he's like, oh my God, if Trump gets elected, this whole thing is gonna collapse 50%. Like people are calling for like .com bubble at the time too. Do you really think that 2000 .com, but people are saying, they've been saying this for years, man. Seriously, it's not just now they're saying, they said the same freaking thing back in 2016 and 15. I'm not kidding you. They said 2015 and 16, Ray Dalio came out and said, it's going to be worse than 1987. Look it up. It's all there. Anyway, so that happened. We saw that swift move there. NASDAQ led, but the NASDAQ just kind of moved sideways. It really corrected through time, right? It didn't see any steep pullback after this kind of move. And then people were like, there's no way you can go any higher with that. I mean, you know, NASDAQ already made so much move. And NASDAQ did unthinkable and just completely annihilated the short sellers, doubters, people who stayed faithfully long, right, was able to participate in that move, right? When it comes to retail traders, small percentages, because everybody was scared. So they thought there's no way NASDAQ can go any higher. Well, it went high, very, very high. And I'm not saying that's exactly what's going to happen. If you look at this now, you say, well, there's no way it can go any higher. What I'm saying is it's a possibility that NASDAQ could see some more pullbacks up and down, right? And maybe those are the times maybe accumulate some of the large tech stocks, right? And you kind of have to understand which level to buy, and you kind of understand overall sentiment, what the NASDAQ is doing. And then potentially NASDAQ could also see another rally. All I'm saying is giving you the possibility and also telling you that the most difficult endeavor is calling top. And what I'm saying is 2015 and 16, trust me, when it comes to sentiment, it was pretty bad. And you're going to say, well, we weren't dealing with the COVID-19, man. It's always something. People are saying something about 2013 and 12. And then I mentioned something, well, we weren't dealing with that. 2015, 16, well, we're dealing with that. Come to now, it's like, well, now it's COVID, now it's this, now it's that. There's always something. So what you do is, right, how you navigate this market is, do not come into like dramatic conclusion where, oh my God, 1929 Great Depression coming. This is a .com bubble all over again, right? It's not .com bubble. Like, I don't have time to explain to you now. I have compelling reasons to believe that we're not. Trust me, it's not 2000 .com bubble. People are saying that in 2015 and 16. Do you know where the market was straight chase? You see, this is why it's most difficult to be long in this market, because if you thought that .com bubble crash was going to happen in 2016 and the Qs were trading at freaking 110, well, Q's trading at 255 now. You're not going to go long here now, and so people just, if you thought that crash was going to come, .com bubble burst, super mega crash is going to come in 2014, 15, 16, no way in hell you're going to start going long anywhere in this vicinity. And you thought, okay, the crash is happening, and you already missed out to buy any of these buying opportunities, right? Now it's at 255. But guess what? Most retail traders did miss it. So you know what they do? They keep shorting. And they may have a short-term result, but in the long term, it's detrimental. You see what I'm saying? So when the Nasdaq gets extended, if you're holding some of those large tech stocks, close them out, and then maybe accumulate again if we do see a further pullback, right? And then slowly accumulating again, and then when the trend starts to get back up, you can start to add again, right? And stick with the long-term outlook. And obviously, man, nobody can see the future, right? Anything can happen, but that's what it means to take a risk. What does it mean to take a risk? It means nothing is guaranteed. That's what it means to take a risk. When you trade the market, when you invest in the market, that means you're risking your capital for capital appreciation, right? And all you can do is, with the proper portfolio management, right, and careful planning, you can able to invest in this market and execute your plan, strategy, and hope that that strategy is going to work. But when you do that, you want to stick with higher probability outcome. Higher probability outcome. You can't try to win a jackpot, because that's how you go broke, trying to win a jackpot. Let's go to the diamond here. So looking at the diamond here, we got this support barely holding there, but and you know what, this is the reason why I don't like drawing these levels, because what most people think, aha, we break below that, that's bear. That's not true. That is not true. See, that's not how these things work. If you thought that, then wow, look at that here. And I think that's what a lot of newbie traders, that's what they do. They draw a trend line like that, right? And then when it breaks below it, right? Now this thing is, you know, coming down. Look, it never did. It never did. We actually went higher. Trend line, when you draw a trend line, it's just a reference point. I want you to know. It's just a reference point. It's not like line in the sand. If it gets below that, end of the trend. No. So diamond looks like we're holding this level here. That's a prior resistance, potentially new support. Got 20 MA in that vicinity. And I'll draw this one here too, because my midterm moving average on the daily chart, well, it has a pretty impressive resume also here. We can see that we find some support there. We got some whipsawing action here, but you know, when you go to spider, obviously you remember my midterm moving average was pretty on point. Just scooping action there. Scooped it here, scooped it here, scooped it here. Diamond, obviously, we're just on that 20 MA. So we still want to give benefit of the doubt. We got these high lows here, right? We're in that vicinity, right? And you'd be surprised how quickly sentiment can change. And we're just barely pulling back, about 2% pullback in the last couple of days. I mean, that, what, you think market's gonna go up every single day? You're gonna see pullbacks along the way, don't we? That's just what the market. That's the kind of a weird thing about this, you know, about the people, right? Market sees a pullback, market sees a volatility. It's all part of normal occurrence when it comes to the market. But you think that every time when there's a pullback, it's like, that's the top, that's the top, that's the top. Every single day, that's the top, right? Let's go to Russell 2000. Russell 2000 is actually holding up well. Also, that gap still remains open. And that's a good thing that this gap remains open, right? We got this uptrend support there. We got that gap area. So that's going to be pretty strong support there in that vicinity, 144. Even if this thing comes down, fill the gap. Once the gap gets filled, it's going to act as pretty strong support. We'll probably bounce from that. It will be better for the buyers if the gap remains open. But again, we want to continue to give benefit of the doubt to the buyers on Russell 2000 as it has been cultivating higher lows and higher highs, right? And now we're staying up here, right, after cultivated higher low. And that's what happened here. And that's what happened here, right? We got that higher low and then some consolidation. Higher low and then some consolidation. We made these moves. Higher low, some consolidation. Potentially a move there. Potentially. I'm saying we have a higher probability going up after it's done digesting or consolidating and resting, right? We may see further pullback or sideways move, but we have a higher probability once it finds traction to the upside, next move, so it can make higher high. Because when it makes higher low, it usually makes higher high. When it makes higher low, usually makes higher high. Again, nothing is guaranteed. Nobody knows 100% where the market is going to go. We're talking realistic probability that may come in the market, right? Let's go to the transport. Let's get rid of that. The gap has been filled. So we got a little bit of fan lines going here. We got that support, and then we got this support there, and let's move this one. That gap is actually still a little open. Right here, right? Their gap slightly open here. Let's actually move this up. I know it's a little bit open, but I like to move it up. I know there's only a little bit of gap, but we like pushed up and then we start moving. So I like to do that and then move this up here. So what I'm saying is, okay, 171 is support, 167. And it's good thing that it made higher lows and then now staying up here, right? And that's a good thing. So, and we're just kind of sandwiched between, we got this down gap. So that down gap is acting as resistance. That up gap is acting as support. We're kind of sandwiched between and potentially some kind of a continuation pattern. Again, these patterns can break down or break up. They're 50-50. If it breaks down, we fill the gap and then we will get up. If we continue higher, we'll fill this gap and then maybe pull back. So we're just kind of sandwiched between there, but the momentum, overall posture, it's bullish. We got that higher high, higher high. We're in the midpoint now, right? That means price is preparing to make a higher high. I'm guessing it's gonna get up there. Next leg run higher. You see they're gonna come up here about 190 and find resistance in the gap area, or it's going to go up and fill that gap. If it goes up and fill it, definitely going to act as resistance. And then potentially another pullback, and then it's pulling back to do what? To higher low, right? So ideal time for you to accumulate is when there's pull. It doesn't have to be perfect, man. You don't have to call perfect bottoms, right? Somewhere in that vicinity, and then ideal time to unload some of your positions is when you see a strength. So strength, you unload some. Weakness, you start buying, right? That's how you should be navigating this market. Not chasing. Not going long when that thing is just, you know, rocketing higher. If you missed your entry, you gotta let it go. At the same time, not trying to short it either because we don't know where the top is. So it's easier said than done, but you want to buy when there's fear and you want to sell when there's greed. Again, extremely easier said than done. Let's go to the banks. I like the fact that, last time I checked, or last time I did the analysis on the banks with you guys was back in early July, and I drew that level last time. I haven't changed that, and you can see how this level held. That 2275, the gap area. And that's a very, very good signal. We held that and we advanced. We're stalling here a little bit, but banks been holding up well last couple days, while the indices were down about 2%, like S&P and the NASDAQ. but banks is about only down 0.2% today, and flat. Yes, pretty much like sideways. So actually, just looking at last couple days, banks been outperforming, holding up here. That does not mean we're not gonna pull back next week, but overall, you see some resiliency on the banks, because the banks been weak, and usually what happens is, when the Nasdaqs are coming down, these weaker sector tends to tank even more. But holding up here last couple of days tells us that there's some resiliency. And once we see a traction to the upside, there could be some big moves, because we saw some big move back in May. I mean, that was 33% move, right, in just several weeks. That was a huge move. If you can able to capture that move, you know what I mean? That was some big move. And there was definitely a lot of fear. You guys remember back in mid-May, there was a lot of fear. I think a lot of people are looking at this as support. A lot of people looked at this as double top, right? And then they looked at it as neckline broke, and they thought that next level is going to come down, make new lows, or retest the March lows. And what happened? Just went vertical. Completely annihilated the short sellers, and also a lot of bulls. They got stopped out if they put their stop too tightly, or they chased it up here, placed their stop beneath it, got stopped out, took money from both sides, from the bears and from the bulls, right? And that's how most people trade, because they're always chasing, or they're always trying to call tops, and it's just, that's not how we should be doing, And you can see that this is a gap area that never filled, and that became a support. And this level would have been great support. Once we saw another gap up on banks right here, that would have been great entry, right? That would have been a great entry. So now, again, low, higher low, higher low, higher high, higher high. We see a traction to the upside. I see another higher high going up, filling this gap right here. 28, they're filling that gap. That will be next target right there. What's the move on that? Yeah, that's 23% move from the lows. And this can all happen, right? This can all happen with the Dow, with the Russell, with the transport, while the Nasdaq, right? While the Nasdaq do this. And then you see Dow going up, you see Russell going up, you see transport going up. I'm not saying that's exactly what's going to happen, because the market is insidiously clever. It's going to do something to make you go crazy. But overall sense, we can see something like that, right? Something like that. Let's go to VIX. So VIX, we got the gap area here, and we're finding a little bit of support. But in a short-term sense, you can see that we have a lower highs, lower high, lower high, lower high there, right? So you can see we got some pops, but once you see that there's a big pop obviously in March, and then lower high. You look at the moving average right here, lower high, lower high, lower high, continually. Once we see a big pop, and then once we got below my short-term moving average, that act as resistance here, and then it continued to act as resistance, continued to act as resistance, continued to act as resistance, and finally in June, we popped, and then now we're back below it, and looks like potentially, unless there's a shenanigan, looks like it's gonna come down, fill this gap, and then potentially next another pop, but that moving average is gonna come down like that and then pull back, something like that. So VIX is we're kind of in a downtrend, right? We're with the lower highs here, and we get these little pops, but it's nothing huge deal at this point. Let's go to gold. Here, so gold really popped. So gold finally broke out here. So finally, I did close 1/3 of my gold longs that I've entered back in, June 2019. June 2019, and been adding on these dips here. I finally closed 1/3. I also closed 1/3 of my silver. GDX I closed, I think 1/3 also. But I closed some on GDX before, as I told you guys in last weekend's video. So I finally closed some of my longs on gold, silver, and GDX as they're getting extended. But notice that I did not close out everything, and I didn't short either, and I didn't buy anything either. Right? I got into a position, right, some of these levels, and then as it got extended, as people got excited, right? As people got excited, when there was greed, I closed out some of my positions. And then if this thing continues higher next week, I'll probably close another 1/3. Right? So that's how you navigate when the market gets extended. But I will never try to short this. It will be better for you to wait to see a pullback and then accumulate. At this point, you know, it's definitely we're extended. It's just nobody knows where the top is. Nobody knows where the top is, right? Nobody knows where the top is. And this was a breakout point right there. This is right there. This is the reason why I had it right here and then here. That was a breakout point. And nobody knows where the top is. Extended does not mean it has to see a big crash. Again, we can correct through time, correct through price. And if it pulls back, like sizable pullback, let's say it's a sizable pullback, I'll probably like to accumulate more on some of these levels. If it just moves sideways, I'll just keep holding the remainder. So you see how I don't really care where to go. If it keeps going higher, I just keep holding what I'm currently holding now, right? So I really don't care which way. We pull back sizable, I buy more. If we move sideways, I just keep holding. If we keep going higher, I keep holding what I have and then maybe prepare to close out some. Let's look at Bitcoin real quick. Let's you guys go with this. Bitcoin obviously still in a downtrend. We did see some pop there. We got this gap area. We're stalling there in that vicinity. If we do fall back without filling this gap, we're probably gonna come down and fill this gap right here. So we're still in a downtrend. We're just in this vicinity. If we do go up and fill the gap, we're gonna meet with the downtrend resistance and the gap fill resistance, and it's gonna pull back also. The best bet for Bitcoin to see any kind of jump or any kind of traction to the upside to fill this gap at 12 needs to gap it up. Needs to gap up above 11. If not, we go up and fill it, we pull back. We start seeing weakness and fizzle, we're gonna pull back either way because we're on a downtrend. So I still don't have any position on Bitcoin as we're still in a kind of a bearish trend there. Bitcoin needs to do something like this for me to get interest in buying somewhere in that vicinity. Until then, as long as we're still bound by this downtrend resistance, I want to stay away from it. So, well, there you have it. I hope that this analysis was helpful to you as you navigate this market. I've answered that question for you extensively, how you should be navigating this market while the NASDAQ is extended, right? Extremely extended, right? It is a difficult market. It is one of those markets where it's extremely difficult for many people because just the way the market has been behaving, just the dynamic, the way the market has been trading, it's been tough for many people because we've never seen this kind of discrepancies in the market where the NASDAQ is just all the way up while everything else is negative, right? So know that when the NASDAQ sees a pullback, it's going to drag everything down. But at the same time, know that other indices laggers might see a catch up while the NASDAQ could hang around, potentially correct through time with some pullbacks. It could see some pullback. But at the same time, you do not want to start loading up long heavily on anything. You should be just holding on to what you already have because where the NASDAQ is. Because if NASDAQ decided, because nobody knows if the NASDAQ is going to, correct through time or correct through price, right? If it does correct through time, let's say it's going to come all the way to maybe 223 or something like that. How much pullback is that? That's 15, yeah, I think 10, I don't see this thing coming down any more than 10-12%. Let's say 12% comes to 237, right? Let's say we see something like that. We're kind of like halfway anyway. Yeah, so let's say like 12% correction, maybe 13, 14. Let's say we see something like that. It's gonna drag other indices down with it. So then you would have better opportunity to accumulate potentially on the NASDAQ tech stocks also if we do see that thing coming down. If we just kind of move sideways here and waiting for other indices catch up, then you could see potentially other indices make a big move while the NASDAQ kind of like sitting around doing nothing, right? So, well, I'll come back for you guys next week. We'll go from there. You guys enjoy your weekend and good luck trading next week.